And taking us through the global markets picture with a specific focus on what's playing out in Europe. We're going to be taking a look at Spain specifically and what the implications would be for South Africa should Spain apply for the European Stability Mechanism. Joining us for that discussion is Derry Pickford. He's macro analyst at Ashburton. Derry, thanks so much for joining us this afternoon. Let's perhaps start off right at the top. Overall, we've had the IMF's Christine Lagarde and a player like Germany's Angela Merkel on opposite ends of the continuum, and that regarding austerity, just which path economies should be venturing down right now. What do you make of the current conversation and debate that's being had on that front?
Well, it's a very tricky situation. My sympathy is definitely with Christine Lagarde. I think that the pace of fiscal consolidation in Europe has been extremely tough. We think that the implications for GDP growth across the whole of Europe, not just the periphery, are going to be severe, and therefore the growth of environment in Europe will disappoint.
Taking a look at that situation then, I mean, Spain has really been one of the players that stood in the spotlight, and that because of its resistance to actually applying to the ESM. I mean, you've got to ask the question, why hasn't Spain gone to the ESM already?
Well, at the moment, it doesn't actually need to go. It had a relatively successful auction last week. It raised nearly €4 billion with the 3-year bonds being priced at just under 4%. So there's no immediate imperative for them to go to the ESM. I think you have to think about what Prime Minister Rajoy of Spain's game plan is. He would be extremely reluctant to have to go to the ESM and have to kind of step up the pace of fiscal consolidation as a requirement for an ESM package before the elections in Catalonia on the 25th of November. So Catalonia, of course, is very quite likely to want to sort of break away from Spain, and that anything which kind of further damages the popularity of Prime Minister Rajoy could be something which would be create a very difficult situation for him.
Where does this leave sentiment, from your end as you see it now? Because we were speaking to an analyst a little earlier, and he was saying that he sees this approach that Spain is taking as a piecemeal. You've got Spain sorting out problems little by little, and each time they solve one little problem, there's a bigger problem that lies behind it. This is a process that needs to be managed properly, and he's not confident that it is in fact being managed, effectively enough.
Well, there is clearly there are a number of issues that Spain has to deal with. Firstly, there's the bailing out of the bank sector, and an important concession that they were able to gain from the rest of Europe was that any loan from the ESM to the Spanish banking bailout vehicle, the FROB, will not be senior to the rest of Spanish debt. So that will mean that we can have an ESM program for Spain for the banks, which won't sort of damage the confidence in the financing of the rest of the Spanish government. So that was one big piece of progress. However, there's lots of other issues that Spain does need to address. I mean, it needs a lot of labour market reform, the replacement ratio, the level of benefits that workers can get relative to what their net income from employment will be is very high in Spain, and that's making kind of reform of the labour market very difficult, and sort of getting a restoration of competitiveness against the core of Europe, a very, very slow process. So there's lots that needs to be done in Spain, ditto for Italy and Greece as well, on structural reform, if we're going to get any kind of longer-term resolution to the issues that we have here.
So back to the topic of austerity then, with a specific focus on Spain, will all with fiscal austerity in Spain lead to a recession in your books?
Well, Spain is already in recession. It's likely to contract about 1.5% this year. The IMF, in its World Economic Outlook this week, released a new forecast of minus 1.3%, which is yet another downgrade. We actually think it could be worse than that. Just because the growth in Spain's key trading partners remains weak, and there's lots of other risks out there. So and together with the additional fiscal austerity, that will just put further downward pressure on Spain's growth outlook.
Yeah, let's take this forward, Derry. I mean, if Spain goes to the ESM, what will the implications be for a player like South Africa?
Well, I think Spain going to the ESM in itself will be actually quite a benign event. I think what we have to ask ourselves is what would be the events which actually force Spain to go to the ESM. And if there is some kind of blowout again in bond markets in Spain, or the Spanish banking system deteriorates further, then that would be a kind of a risk-off event which will inevitably damage economies like South Africa, which to a certain extent have been very reliant on foreign inflows to finance the current accounts.
Mm-hmm. Just taking a look at things, I mean, we've had this debate on whether domestic issues or international issues are plaguing the South African economy most right now, and quite a bit of focus on what's playing out in the domestic arena within our borders here. Derry, your perspective and on what's playing out in terms of industrial action on this front and how that's impacted sentiment on your end?
Well, I think that clearly international investors got very concerned as the industrial action has spread beyond the mining sector. Clearly there are a number of issues which South Africa has to resolve. I think that overall, I mean, we've had a recovery in the rand recently, and actually, on the whole, I think most international investors have been so far reasonably relaxed about the escalation. We still have net positive inflows into South Africa on the JSE data, both in equities and in bond markets. So for the moment, international investors don't seem to have taken fright.